Are you tired of missing out on major market trends? What if I told you that using just two simple indicators, Supertrend and Donchian Channel, you could ride big trends, cut losses early, and avoid sideways traps? In this video, I'm going to show you a powerful trend-following strategy that works only on the weekly time frame and is designed for long-only trades. It's perfect if you're someone who can't watch the market all day, but still wants to catch big moves in trending stocks or indices. This strategy uses free tools on TradingView, and it works best on liquid stocks. And the best part? You only need to check the chart once a week. Here's what you'll learn: how to set up the chart step by step, how to enter and exit with clear, simple rules, how to avoid false signals in sideways markets. Let's get started. We'll be using two free indicators on TradingView, Supertrend, Donchian Channel. This strategy is built to capture big moves in trending stocks or indices while avoiding false signals in sideways markets. But before we look into the strategy, quick question for you. Do you know how to mark a demand zone using only price action and candlesticks? Let me know in the comments, and I'll explain it as a bonus tip at the end of the video. That alone can help you time your entries like a pro. Coming to our strategy part, open TradingView, set your chart to the weekly time frame. We're going to add two indicators. Go to Indicators tab. First indicator is Supertrend. Add it to our chart. Second indicator is Donchian Channel. Add it to our chart. For Supertrend, go to Settings. Change the settings. Change ATR length 10 to 7. Factor is 5. Adjust thickness for visibility. For Donchian Channel, change the settings. Length is 12. Since we're on weekly, this means 12 weeks. Uncheck the basis and lower band. Keep only the upper band. Adjust thickness and change the colors for visibility. We enter a long position. When the Supertrend changes color from red to green, the Donchian upper band is touching the same candle as the Supertrend signal. Entry is made at the high of that candle. Stop loss is set at just below the entry candle's low with a small buffer. You have two exit options. First one, conservative. Exit when Supertrend changes back from green to red. Second one, dynamic. Here is your pro tip. Watch the Supertrend line. If it starts to go flat, that indicates sideways market. So don't wait for Supertrend changes its color from green to red. Instead, exit when the price touches or comes near the Donchian upper band, because sideways markets often eat your profits. A flat Supertrend line is your early warning. If Supertrend turns flat immediately after entry, exit early when you reach the Donchian channel. Don't wait to hit your stop loss. If the price touches and closes above the Supertrend line for the first time after entry, you can add more quantity. If it touches a second time, that's a signal to exit. Avoid overstaying. Let's apply this to a real stock, for example, Philip Morris. Weekly signal appears. Supertrend turns green. Donchian touches the same candle. Entry is at the high. Watch how price moves. If Supertrend is rising, we hold. When Supertrend flattens, we consider partial exit. Supertrend turns red, final exit. This trade gave a huge profit. Want to add even more edge? Here's how to mark demand zones using price action only. Step by step. Choose a higher time frame, monthly or weekly or daily. From the current price, go down and then take left on the chart. Look for these formations: drop, base, rally, rally, base, rally, rally, base, rally, rally, drop, base, rally, rally. What are these candles? Drop candle, big red body, small wick. Rally candle, big green body, small wick. Base candle, small body, large wicks, both sides. Mark two demand zones for higher time frames. This will work on lower time frame too. These demand zones act as strong support, and if price returns to these areas, it often bounces back with strong momentum. More than 3 base candles together means that zone may not work well. If you see multiple rallies from a base, it indicates strong demand. This strategy is easy to follow, works great in trending markets, filters out sideways traps, built-in risk management. If you've been struggling to catch those big trends or avoid those frustrating sideways markets, this strategy might be the game changer you've been waiting for. Try it out on your favorite stocks this weekend and see how it performs. If you learned something new, smash that like button, drop your thoughts in the comments, and don't forget to subscribe for more strategies that actually work. See you in the next video. Stay consistent, stay patient, and as always, trade smart. Thank you for watching.